From San Diego, California, this is the Frug Life Podcast, the show that teaches you how to save, invest, and earn money. Here's the host, Mr. Frugal himself, Ricky Hirsch.
Welcome to the Frug Life. Today's episode is titled Rock, Paper, Scissors Trading. So let's talk a little bit about technical analysis. But before I do this, I want to talk about a game. I was playing this dumb mobile game, and from time to time, as part of the game, you play rock, paper, scissors against a human opponent. And I started winning so many games in a row, I started to ask myself, is rock, paper, scissors a game of skill? Because up until that point, I thought it was a game of chance. So the odds of winning any given best 2 out of 3 match would be 50-50. And the odds of winning any given round would be 33%, as each round has a 33% chance of a draw. Just for reference, the odds of me winning 10 games, and by games I mean best 2 out of 3 matches, in a row, if it was pure chance, would be 1 out of 1,024. So pretty unusual. It would have been odd if I won that much, and it was purely chance. And while playing these matches, I did utilize a specific strategy. Now, before we talk about that, let's talk about a scene in the movie, The Princess Bride. Have you seen that movie? There's a scene with the cup of poison. The protagonist poisons a goblet of wine. The goblets are placed in front of the two characters, and the villain is able to choose who drinks from which cup. So he has the choice of drinking the cup in front of him or the cup in front of Wesley, the protagonist. Here's a quote from that scene. "Now a clever man would put the poison in his own goblet, because he would know only a great fool would reach for that which he was given. I am not a great fool, so I can clearly not choose the wine in front of you. But you must have known I was not a great fool. You would have counted on it, so I could clearly not choose the wine in front of me." So Vizzini, the villain, goes through iterations of this several times. And in a way, this challenge is a little bit like a game of rock, paper, scissors, right? The game revolves around countering your opponent's move. Only a great fool would use paper because a clever man would just use scissors. So using this line of thinking, I like to describe actions as levels. Like level 1 is Vizzini's first thought. He should pick the goblet in front of his opponent. Level 2 would be Vizzini counting on his opponent being a clever man and putting the poison in front of his opponent. And then level 3 flips that back around again. And with rock, paper, scissors, it's the same thing. It's just there's one more level of pattern. Instead of just 2 repeating patterns, there's 3 choices. And so a pattern of 3 repeating. So in the first round of rock, paper, scissors, I would just choose a random action, or as random as I could choose. And really, that's all you can do in the first. So let's talk about what a level 1 response would be. In the first round, if my opponent throws down a rock, a level 1 response could be to counter it on the next turn and throw paper. So baked into this thinking is that if your opponent throws down a winning move, they will just repeat what they did because they won. So if they won using rock, they'll throw rock down again. So a level 2 response to rock would be to throw rock, because you are assuming your opponent will assume that you are going to take a level 1 response and throw paper. Therefore, they would throw scissors. And so as that level 2 response, you throw rock. And so whenever I lost a round, I would take a level 2 response. And I think I did often when I won too. I don't remember exactly. And for whatever reason, at that time, in that game, in that particular win streak, taking these level 2 responses resulted in more wins for me. So what does any of this have to do with trading? Well, when I think about using technical analysis to make a trade, people sometimes look for patterns in the stocks to determine what they should do. So if the chart reads a cup and you think it will be a cup and handles, you'd execute a trade to make use of that. Really though, based on the past, you can't know the future. In a sense, it's like the game I was describing. And sure, maybe like me, you can temporarily find a quote winning strategy. But I don't think it was just pure luck that I won all those games. That seems unlikely, like I said before. Rather, I think I got lucky in the strategy I implemented. That in those games with that current meta, I was able to perform better than average. But it's important to remember that that meta can change at any time. Likewise, what you uncover as a pattern to trade on might just be a temporary inefficiency in the market. To put it in simple terms, like in rock, paper, scissors, if a chart shows a sign and people irrationally throw rock and you throw paper, you win. Now, maybe not immediately, but people eventually will get wise and start throwing scissors instead. All right, let's take a quick break and we'll be right back. Just here in my garage, bought this new XLR microphone here. But do you know what I love even more than material things? Knowledge. And with Anchor, you can find and share knowledge. With Anchor, you can easily create and monetize a podcast. The billionaire Warren Buffett said, "The more you earn, the more you learn." Visit Anchor.fm and make your podcast today. Welcome back. So I have an example from another blog, Legacy Advisor, that I was going to share a quick excerpt for you. And a link to the blog post will be available in the description. But from the blog it says, suppose I have a crystal ball and I tell you the exact date the market will bottom out and begin a historical rise. Let's just say it's August 12th. So all you need to do is enter the market just before that on August 11th, right? Well, not exactly. We have to assume, just like in the real market, that many other investors also have this information. So if everyone plans to buy on the 11th, well, actually, the day to buy will be on the 10th, so as to beat everyone else to the punch. But wait, since we know all of those other people are clever, and we know that they're going to buy on the 10th, then we actually need to buy on the 9th. And therefore, we actually must buy on the 8th. But wait, and again, that is a process that will continue on indefinitely. And I think this author has a very good point. And I think what we can take from this is that if technical analysis had clear actions to take every time that would just work, everyone would take them. And if everyone took them, they would not work. And that's why I think these reactions to possible trends is all just the current meta. That you can execute a trading strategy that might work for now, but definitely can't continue in the long term. So there is a theory in finance called the efficient markets hypothesis. And that basically just talks about what we're talking about right here. At its weakest form, the efficient market hypothesis says that you can't use historic information to determine future prices. In essence, you can't look at a stock's history in order to determine where it is going in the future. Like we were saying before, if you could, everyone would just do it. And if everyone just did it, it wouldn't work, right? Because everyone needed to beat everyone else to the punch. So all of this episode is a really long way of saying why I think technical analysis, for the most part, doesn't work. Now, of course, I need to disclaim this whole episode that this isn't financial advice, this isn't trading advice. This is just random speculation by me. And by random speculation, I mean this isn't a theory I actually learned in school or anything like this. It's just some things I hypothesized about markets and one way that they potentially could work. This is just what I think at this time. And, you know, the reality could be different, right? Maybe this whole level 1, level 2, level 3 paradigm isn't the right way to think about things. But I think it is an interesting one. And to add to that, because maybe it's a little unclear, I definitely learned about the efficient market hypothesis in school. I just didn't learn about this whole rock, paper, scissors idea, which of course may or may not be true. Anyway, thanks for listening to today's episode of the podcast. I hope you enjoyed. I hope it gave you something to think about. So until next time, have a great month and stay frugal.